Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets. I want to welcome you to Before the Bell, your home for actionable pre-market content. And as always, please run the video at 1.5x for maximum performance. Right out of the gate, I want to thank Viral and Mike for the donation to the cause here, helping me keep the lights on. I really appreciate that. I continue to work hard to give you levels and ideas that you can put on objective trades around, and we might even make some money along the way. Okay, I want to jump right in with our oscillators. We had put those on kind of a yellow flag type warning yesterday as they dive to the low end of the range. And here we are with the NYSE oscillator. We're down at 48 and getting close to our minus 60 level. And I want to show you the NASDAQ oscillator as well, that's down at minus 52. Now I want to just kind of lay out that we've got a bit of a tricky scenario here. We're getting down to oversold. We know that moves in the oscillator below 60 put any shorts on borrowed time. Now, we're not guaranteed a bounce at 60 or minus 60, but the probability greatly increases as we go down, right? So we've had quite a number of days of selling. It's certainly been an environment where you want to sell the rips. We've seen bounces that go into resistance that have regularly failed. But we've got January OPEX tomorrow. And then, as we know, as we come out of a big monthly options expiration, all that delta rolls off where people, have positioned, and then they've got to reestablish those positions in the week following the January OPEX. So usually the week after OPEX is a period of time where you would expect increased volatility. And kind of what I'm thinking, and this is just pure speculation, so it's not something that you can take to the bank, but I like to offer scenarios where you can put it into your narrative of how you want to approach the next several days. Number one, I think you got to tighten your leash on your short exposure and, heighten that concern over a bounce. Now, what I'm kind of thinking is we may have one last push. It might not be today, it might not be tomorrow, but coming out of Monday and Tuesday, have one final move down and then a sizable bounce where you'd see the oscillators, bounce up towards the midpoint of the range. Now, that's all speculation. And how I would handle that is, in the back of your mind, if you've got trading any stock and you see that price coming into a support zone, and knowing that the oscillators are already pretty well extended and likely going to reverse sometime very soon, I would, number one, really tighten up that stop or even take it off if price is coming into a nice support zone. I would expect that to hold. Of course, if there's some more selling in the general market, it may make a marginal low below that support level, but not something where you can fine tune it to the extent that, okay, now I'll get out. I think you've got to kind of front run what you think is going to happen. And I think that is all within the context of a backdrop of an extended oscillator to the downside, coming up on OPEX. I mean, at some point you got to go to the bank, and we know how vicious those bear market rallies can be. So I'd hate to see you, just sit there watching your nice gains on the screen disappear with an overnight bounce, something like that. We're up a little bit today. Actually, I forgot to go through the futures, so let me do that. Bitcoin up 0.5%. Oil and gold are flat. Copper's up 1.1%. That's on a real run. Large caps and small caps are up 0.5%. Nasdaq's up 0.9. Over on the earnings front, we've got American Airlines before the bell, Union Pacific, and a bunch of regional banks. That'll be interesting. And then after the bell, we got a biggie in Netflix. We've also got CSX Railroad, PPG. That may be a read on chemicals and the material sector, and also some more regional banks. So, and we've also got jobless claims here this morning at 8:30, as we always do on Thursday. And then don't forget, we've got, because of the holiday, we've got both natural gas and oil inventories coming in at 10:30 and 11 o'clock. So getting back to the topic at hand, just tighten up the reins on your shorts, expect a bounce, and then whether, when that starts, it'll be up to you to decide, how nimble you are, how active a trader you are, whether you want to trade that bounce on the upside or just wait for it to peter out, roll over, and then you can get short again, recycle into shorts. Because I think now we are definitely in the regime of selling the rips and leaning short on our position. So let's go through and see what happened yesterday. We are coming in to this. We were down 1% yesterday after a little rally in the morning that failed, and now we're coming into this key 450 zone. I really think that's going to hold. That's going to be it. That was a prior low here, good, a good level of support. I would not expect this thing to just, fall apart between today and tomorrow. I think the market makers and the powers that be will want to hold 450. And if anything, on Friday afternoon at 4 o'clock, 450 would be a perfect place to keep everybody guessing. If you were generally bearish, oh my God, do I want to hold this position over the weekend with the oscillator stretched and blah, 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 weekend risk? I could wake up to a, 2% gap up. Or if you're long, figuring on a bounce, you'd be biting your fingernails all weekend on, am I going to wake up to a 2% gap down? So this 450 area would be a perfect place for the market to keep, the whole world guessing, both bulls and bears, on what's going to happen. So I would expect that 450 to hold. Here we've got the 2 hour where yesterday morning they rallied it up into this 459 right near the gap, and then they rolled it over the rest of the day. And so for you active traders, how could you have approached it? Well, you had a high there and you were close to the gap, so you could have potentially gotten short against the gap once you saw that start to fail. And then you had another entry when the top of this gap failed a prior level on the chart, and then another entry would have been down around 456, where this thing broke this support area here and then just fell apart. So I think there's room to come down to this 450, 449 area at these prior lows, but then that would be a place where I think it would hold into tomorrow afternoon. Let's look at the Qs. We had a little reach up candle here that got in near this prior gap, did not even really make a strong move, and then it fell apart. Notice here we've got the 200 and a gap coming in. So as I've been saying for a while, I think that first touch of the 200 is going to be it. Between the 200 and the top of the gap, I think that's going to hold into the weekend. And again, that would be a perfect place to call it quits this week for the selling. Now, could it come down to test these prior lows at 355? Sure, it could. So how I would handle that would be, if I had gotten short the Qs at 380, like we discussed, right, at the bottom of the box, which was major resistance, here's what I would do. I would take off my short position if I got a move into the 200 and the top of the gap, and just go flat at that moment, and then watch. Does it start to put in a bounce where you could tactically get long and try to play that bounce, or wait and see if they in fact try to break the 200 and try to fill that gap, and then you could play for a move down to 355. But if I was, if I had already had, if I was already $15 to the good from 380 to 365, I wouldn't be just holding on to that over the weekend. I think it's that would be a pretty risky thing. Now, if you wanted to take that off and then reestablish a new position where you've already gone to the bank with that big win, and then say, you know what, I'm going to play for a bounce over the weekend, or I'm going to play for Monday morning, disaster move down to 355, that's fine. But that's more of a speculative trade than anything else. And just remember, the position of those oscillators. Here's the 2-hour on yesterday's action. Certainly, if you did not short this high, your next short was on a break of 372, whether you took it on this bar, or when you saw that this bar failed to get back above 372, and then you got a nice closing move. Now, note here, I've added the position of the 200 EMA off the daily at 363.80, and then you've got the gap just below that comes in around 383.50. IWM, really, really bad shape. We've been beating IWM to death, watching this 210, we had a little back touch of 210, and then it just fell apart. I've got a support level at 202. Then I've got a gap down, 197.75, something like that down here. So if we go look at the 2-hour chart, you can see that the other day we did the measured move for this A, B, C bear flag measured move. We're right there right now. So today your pivot point excuse me, is 204.50. But the bigger picture is being short IWM against 210. As long as it's below 210, that door is open to 190, and that goes back to our $23 range subtracted from 210, puts us down at 290 or even a little bit lower. Of course, that's not going to go in a straight line, but any kind of kickback rallies up into 210 would be another bite at getting short. And if you're nimble and we get that oversold bounce, maybe we go down a little bit more and then come back up, it would be very objective to recycle your shorts into a move above 210 or up to 210 that stalls, but keeping in mind that we've got an open gap right here. I wouldn't discount the possibility of a bounce that comes up and fills this gap up to 214 and then have it fail from there. As we get into the FATMAAN names, I want to welcome anybody that's new to the channel. I really appreciate you being here. What you'll find here is a technical presentation, where I give you all the key levels on the stocks that we trade on an everyday basis. Objective levels where you can hone your execution skills and take objective trades, either long or short, against those levels. And that's something where I really hang my hat on, giving you really good location, good trade location, good commentary on what I think is going on specific charts. And if you're into that and you appreciate that, please hit the subscribe button, the alarm bell, and the post notifications. That way you'll get all my YouTube content. And if you are so inclined, I'd really appreciate it if you jump over in the show notes, find the link to the blog site where you can drop in your email and join the team. That way you'll get all my content morning, noon, or night. Midday updates, trade ideas, commentary, stuff like that, you'll find right in your email box. It'll be so convenient. You won't have to look for it, and you won't miss a thing. So please do that. And also, if you care to, pass the link along to your trading circle if you think others will benefit from the work. So, Facebook dropped out of this $20 range, made a little run back up to the 200 and the bottom of the range yesterday, and then closed on the lows. So I think you can be short against 324, 325 on Facebook, with the target being 305. And if I was short, anywhere below 325, I think your logical stop on Facebook has got to be the 200. Any reclaim of 200, and I think you gotta get out of that position. Here on the 60-minute chart, we put in a nice low here and it was certainly objective to be long against 319, 320. Why? Because obviously from the candles, we see all the responsive buyers at that level. They ran it up yesterday. Notice the tag, notice the wick that went right up to the level that I identified as a potential resistance point, and it was not able to get above that and then rolled back over. So there were a couple of good trading ops in that, and actually yesterday in the trading room, when this failed and came back down, I told the group, get short against 324, and luckily that worked nicely because we had come up above a level, and then that level failed, and then we got the move right back down to that 320 level. So I think that's your active pivot for today on Facebook. Apple, they're starting to go after the generals, guys. Very weak day for Apple. And really more significantly, it lost the 50. And you can see that coming in right about 168 where we had marked on the chart. And so that's going to be a very important line going forward, is if Apple can recapture the 50. So put that in your narrative if you're an Apple trader, or even if you're not, because I mean it is both a sentiment leader and a market cap leader. So you want to keep an eye on what's going on, because if they're going after Apple and they're going after FATMAAN in general, Facebook and Microsoft and all these names, I mean, it's math. The indexes are going down. So that's a name that you really want to keep an eye on right here. And you can see that we've got an open gap below and then a big support level. I've dropped in a modified trend line off of this low, bringing it up into 157.50 at the bottom of this support zone here. If we were to break 157.50, then we got the 200, and then we got this longer term trend line that comes in at around 147.50. And just to show you on the 60-minute chart, price opened, I believe, right here at 170. Yeah, 169.80. We had this little move up to 170, which was the top of the zone, and there it failed. So if you were Johnny on the spot, that was a good shorting location. But say you missed it, no problem. You don't get disgusted, you don't get mad, you look for the next opportunity. And that next opportunity came on a break of both the 50 and the top of the gap. And this was called out in the trading room as well. Apple's entering the gap, and you got an exact gap fill. So today, the bottom of the gap here is your pivot point. Does it hold here, or do they, give it another run down to the top of this gap, down at 164, or do they try to bounce it? And what I've done here is I've projected that bear flag measured move, a first down leg, kickback, bear rally that failed, the second leg equal to the first leg, and that projects down to a gap fill of the second gap down at 162. So that would be the measured move target on this Apple move. So we'll have to see how that plays out, but that puts even more importance on 166. And like I said, you get a kickback rally into the 50 at 168, the top of this gap, you got to be leaning bearish there. And if you get stopped out, you get stopped out. But it doesn't take a genius to see the bearish trend. And just using our TA axioms, nothing really good happens under the 50. So when your stock bounces back into the 50 and fails, that's always a good place to at least try a short and see if you can get it to work. Tesla, inching below this 1,000 level, which is the bottom of the box. But we do have a nice uptrend line coming off of these lows up through the trend. And so right here at about 980, 975, I would expect some fight to be put in by the bulls to try to hold it there. But on a break below the trend line, then I think you're going to come down to this open gap and make a run at filling it. That may not happen today or tomorrow, but if that trend line is broken, I think it would happen sometime pretty soon. And here we see the resolution on the 60-minute chart. Now, yesterday, remember we said that 1030 was our new pivot, and you got a nice rally into that level, and then it rolled over. So you got to move from 1030 down to 995. Not the most dramatic trade in the world, but just from a technical perspective, price did just what we kind of expected it to do. And so now if you're short, you can stay short below 1,000, but any kind of break back above, I would be taking that off and looking to the long side if you're an active trader. Moving on to Microsoft. This has been such a great active trader stock, and you wouldn't think so, being a mega cap tech name, but it's moving, $6, $8, $10, $12 a day. Here we got a $15 move. Yesterday, we got a move up into 313 that failed, with it closing on the lows down at like 303. And we have been focused like a hawk on this 305 level. That's your big line in the sand. As long as it stays below this prior breakout level, you got to be leaning to the downside, and you've got the 200 coming in here at about 293. I want to show you the 60-minute chart. Pretty interesting. I wouldn't say it was the easiest to trade yesterday, but there certainly were trades to be made. We had this big impulsive candle, and your first hint that there was a problem when that high could not be held above 313. And so that certainly would have been an objective place. And certainly when it broke back below this level that we had at 313, that was a potential short. And you got a quick move down to support at 306. You got a bounce, and then you failed 310 again on the way down, and that was your nice move going from 310 down to 303 in just a couple of hours. So that was a nice trade. And just if you remember the principles, recapturing levels from below is bullish, losing levels from above is bearish. So we lost a level from above, bearish, lost a level from above, bearish, support, held, lost a level from above, bearish, and back down. So you've got a pivot point today, basically at the lows, down around 302.50. 303 area for today. Amazon, I think this is headed to 2950, to be quite blunt about it. We've got a fully developed bearish EMA stack with all the fast moving averages moving below the 200. The 200, you can't see it here, but it will start bending down. And when you've got negative sloping EMAs, you know it's bearish. And we keep losing these significant levels. We lost 3350. We lost the trend line. We lost 3250. Yesterday we lost 3175. And so now we've got a little support at 3100. And then really the door would be open down to 2950. May not go there in a straight line, but I think it's going to the bottom of the box. And here we see the price action from yesterday where we lost that prior low at 3150, 3145, and then we got that move. So I don't have it drawn in here, but there's a pivot at 3100. So I think there is some downside available in Amazon. And I think any break back above, so for instance, if we get into an oversold bounce situation on the NASDAQ and you get, a down move and then a recapture of 3145, I think you can jump on that with a target at the bottom of the gap. And then with any luck, that bounce will get some follow through up to 3250. And then that would be a really, really nice bounce trade. Google. More bearish action. What I've done here, like you've seen on the other charts, impulsive move down, kickback rally, measured move target, brings you down to this gap with the 200 in between. I think your massive line in the sand is right here at 2680. Let's look at the 60-minute chart to get some resolution on that. Yeah, 2680 at this prior low. That's got to hold, or you open the door down to the 200. So we broke the prior low yesterday and got a little follow-up move. For you active traders, we got a rally. It actually went into the gap, but there was no follow-through. Hit this downtrend resistance and rolled over. So if you were on that, that was a pretty sharp trade. And congratulations to you on that. Netflix. Sitting right here at 515. No surprise. We got earnings after the bell. So what I imagine is, unless there's some kind of leak or an idea of what's going to happen at earnings, I would expect a holding pattern, and then knowing Netflix, you'll either get a moonshot or a rug pull after earnings. No way to predict that. I wouldn't, unless you're an expert on Netflix or a gambler or know how to trade these earnings, I would just steer clear, and we'll pick it up after the dust settles. Devastating couple of days on semiconductors. I want to show you, start with the daily chart. Big range, that broke yesterday. Big impulsive candle down. We broke through this 290 area, which was support. Now it's resistance. Using our TA principles, you break a trading range, the target becomes the bottom plus the width. So that projects down to the 270 range, which coincidentally or not, depending on your view, is right at the 200 and the top of the lower gap. Now, I expect some support on these gaps. We know we're getting to oversold conditions on the NASDAQ. I wouldn't be surprised if you got a kickback rally up into 290. Let's go back to the 60-minute chart. Get a kickback rally into 290. Maybe that even extends up above to come back to the 50. But if it made it back to the 50 on a rally, I would certainly be trying to fade that at that point. I put this gap in here, comes in at 283.50. If we get some follow-up selling today or tomorrow or Monday, first touch of that gap, I would expect to get a little bit of a bounce. If it doesn't hold, I think you'll get an immediate gap fill down to 281, where I would expect there to be a bounce there as well. So I always view the semis as a risk-on, risk-off asset. And after this big rally here, they've faded the whole thing. And, below the 50, below key support that's now resistance with this prior low here and this prior low here. So things not looking very good for semis. We had a nice move in gold yesterday. Sent out a midday note, probably a little late on the trigger, but one thing that's very interesting here, I've got a note that falling dollar and falling real yields are bullish for gold, except you know what? The dollar's been rising over the last few days, and real rates have been rising as well. So it's very interesting to see gold start to make a move when these traditional metrics for bullish gold action are actually being a headwind at this point. So I've got the top of the gap here at 172.50. Got a big level here at 174. And I would anticipate the crowd starting to pay attention to this, as it moves higher. We'll see if it can get above the gap, see if it can get above 174, and potentially make a flash move up to 179 at the prior high, which we had back in mid-May. Also sent out a note on GDX. This is going to be your leveraged play if you want to get on the gold trade. It's going to be more volatile, but there's more potential upside. You'll see that GDX was up 7%, and what was gold up? Only 1.59%. So that was quite dramatic. If you miss that move, no worries. Why? You're right at a downtrend line. You take that downtrend line out. That opens the door to 34. You've got a gap up here, and then you've got a gap way up at the top at 39. So there could be some really potentially nice action if gold can keep its bid. It's been a tough trade the last 3/4 of a year. A lot of choppy action and a lot of heartbreaks. But if you're interested, you got to take the signals when they come, right? And if you get stopped out, you get stopped out. But things are looking up. Notice on the indicators, we're starting to make a move above the zero line into bullish territory on PPO, and we've already broken above 50 on the RSI, so that's looking up. So stay focused on this trend line and then look above to 34. Yesterday, Took a position in DBA. This is the blended ag commodity. Rather than try to play corn, soy, or wheat, just get long ag commodities. Bit of a front run here. If you're not in it, no reason to say you missed anything. If it breaks out, you can get long there into, buy the breakout above 20, 30. And I think that would be a perfectly acceptable trade to make. And I would go out in time. I wouldn't try to, get too cute with it. March, April, something like that. Not get too worried about being up or down a little bit, and stay focused on this rising trend line. And you've got all the moving averages curling up. Also took a position yesterday in ConAgra, breaking above this resistance line. I'm looking for a move up to 38. And what really piqued my attention, actually it piqued the attention of somebody in the trading room, I think it was Ron that kind of flagged it, is, we had a stock up. It was actually up higher than this during the day, fell back a little bit. But, you've had a lot of selling over the last, couple of weeks while this is rising, and you see all the moving averages rising. You see price taking out the trend or the resistance line and opening the door for a run to higher highs. And you're seeing this a lot. You saw it in P&G yesterday when they reported earnings. It was up 3.5%. These consumer products companies that have some pricing power and pay a decent dividend are starting to see some love. Lower volatility stocks, not your high beta, high flying names that are getting killed. People are trying to find some safety. I want to finish up with a relative rotation chart from stock charts. And what you're looking at is the containers and packaging sector within materials. And what caught my eye when I was taking a look at this was, this is a 5-week rotation. So over the last 5 weeks, you can see this positive clockwise rotation happening where all these names are perking up. And what's interesting about that, of course, is it's benchmarked against SPX. So on a relative performance basis, these are all shaping up. And we've got Crown Castle emerging into the leading sector. And I looked at Barry and didn't like the chart as much as Crown Castle, so took a long position in that one. And hopefully we will continue to see the rest of the packaging group follow these guys' lead and drive higher. And if you wanted to, you could certainly look at Owens, Illinois, WestRock, Packaging Corp. Some of these names are starting to extend and might be a promising sector. I wouldn't load up with multiple names and go crazy. I'm just going to stick with Crown Castle. But if you see a chart in there that you like better, then have at it. I think the group is really shaping up. So let's wrap it up for today. Thoughts for today: watch the regional banks. A lot of them reporting today. Your ETF is KRE. Keep a short leash on your shorts. We're getting overextended. I don't want to see you trapped in a vicious short covering rally. We've got OPEX tomorrow. Make sure you take care of any names that you have expiring tomorrow. And then we'll have to talk tomorrow about how we want to position for over the weekend. Hope you like the analysis. This has been Chris Buss with Traders Profit Compass. Talk to you next time.